As far as like combating the emotions, I think one word is acceptance. Accepting. I mean, you did allude to, I've been trading almost 30 years. So accepting cycles of the markets, like Peter Lynch has talked about, bull markets, bear markets, corrections, accepting that that's going to happen. And the second thing that comes to mind is knowing your time frame, because that can help reduce those emotions when you understand your time frame.
And just so people understand your time frame, what kind of time frame are you looking at, Joe?
I like to trade those power trends, or those 2 to 3 times a year the market's healthy.
Yeah.
And I like to try to trade that. They usually last about 6 to 12 weeks. So that's that whole line. You make 80% of your money in 20% of the year. It involves some patience. It involves putting in the work and identifying when things improve, because I want to try to invest or trade anywhere from a few weeks to a few months of holding swing trading stocks. I want to do that when the wind's at my back. And as William O'Neill said, 4 out of 5 stocks, and maybe said 3 out of 4 stocks, move with the general direction of the market. So when the wind's at our back, I want to be involved when the general direction is in an uptrend.
Now, this is Marty Zweig, Brett Thrust, and these are signals since World War II. This is data that you got from Ryan Dietrich, that posted a lot of this from Carson Investment Research, Ed Davis Research. What are we looking at here? What is the Brett Thrust?
So it's interesting that it combined with the follow-through days we had on April 22nd and 23rd on the NASDAQ. Anyone can just Google or go to Investopedia to get the definition, but the gist of it is, over a 10-day period, an incredible surge in buying from the institutions. So the biggest takeaway here is that line that the big institutions control the markets. That's bottom line, period, end of sentence. The big pension funds, hedge funds, mutual funds that are trading hundreds of thousands, if not millions of shares, they control the market. So when they are distributing stock and selling consistently, I want to get out of their way. And when they are buying, I want to pay attention to that. So the bottom line here is the Zweig Brett Thrust, invented by Marty Zweig, is that surge in buying over a 10-day period. It's only happened 19 times since World War II. So it's something to pay attention to, a rare signal. And every time, 12 months later, the market's been higher. So it's important because it's rare, and it's also been consistent when it happens. But the whole point is, it was a surge in buying that also coincided around those 10 days from mid-April, whenever it was, those 10 trading days, when it also coincided with the 2 follow-through days that we saw.
Yeah. And just to, put an exclamation on that point, the average and median right around 23 or 24, 25%. So as much as you said, oh, don't expect much after a 25% back-to-back years, we could be looking at, because of the Brett Thrust, potentially, another big year.
It's possible. Yeah, my whole point was of just keeping the expectations realistic after back-to-back 20+% years. I hope we get another 20+% year, and it's possible we could. Anything is possible. But my whole point of that was to expect some digestion. But again, this shows out, time frame being the key word here. This shows that 6 to 12 months from now, from that Brett Thrust, which would take us to about October to next April, is when you can expect it higher. And to your point, if the S&P average does about 8 to 10% a year, depending on dividends, the fact that it's more than double that and an outsized gain is something to really pay attention to.
And also, sometimes people forget that in order to get that 25%, it's not a nice straight line up. There's a lot of, that's just taking from one point to another point. When you're looking at 12 months, there can be a lot of movement in between.
Yeah, well, you can see 3 months later, sometimes the market's flat to down. So
right. Yeah.
Great point. It's never a straight line. The market is designed to fool the majority of people. All those quotes, it's never easy. So again, remind yourself of the time frame, and also accept there's going to be pullbacks and normal corrections along the way.
Absolutely. Now, there's another rare signal. So it's and you were telling me that you had like 7. You chose 3, but there were all of these
there were a lot.
unusual signals that all kind of happen at the same time. So this is, I didn't know what else to call it except for a 3-day jump.
Yeah. This is three consecutive gains of greater than 1.5% on the S&P. As you
Mhm.
can see there, what, 9, 10 times? It's very rare. It also coincides with the breadth thrust, coincides with the follow through days. The bottom line, again, if anyone wants to take anything away from this, the big institutions control the markets and they came back in aggressively in the second half of April. And
Mhm.
it's very rare you get three consecutive gains. Tying it into psychology, a lot of sentiment measures, CNN fear greed was at 3. That's measured from 1 to 100 or 0 to 100. It was at 3, which is
Yeah.
fairly putrid sentiment. NAIM, the active investment managers, all across the board, a lot of different sentiment measures showed people fearful, reducing exposure, buying puts. And it's amazing that when everyone throws in the towel, the market just comes back, and you usually get these incredible gains when people are caught off guard in cash or short. And that's when it's a rare signal, again, leads to gains 12 months from now.
Yeah. And it's worth noting that a lot of times I like that this is using a 3-day because a lot of times people will point to 1 day. And certainly April 9th, being up over 12% in a single day is notable. And I think that was the third biggest percentage gain. President Donald Trump mentioned how it was the best day ever. Point wise, yes, I think if you look at percentage gain, I think it was the third, so right up there. But a lot of times those do happen around volatility, and there was a lot. I mean, what were we down like 5 or 6% the next day? But this is different because it's looking at three consecutive gains of 1.5% or
It
more, and
kind
that's
of
where
goes with
things
the
get
concept
different.
of a follow through day is you
Yeah,
ignore like those 1 or 2 day bounces. So when
exactly.
you get three consecutive, and it's not exactly, I mean, 1.5%, so collectively over 4.5, 5% at least, that's a pretty nice surge in buying of, again, maybe facts changing, people getting too negative, but the whole point is a huge surge in buy.